Hi, welcome to the Market Alert for Friday, the 2nd of August 2019. So stocks, yuan, oil and bond yields collapse as Trump calls Powell's bluff. And certainly did that yesterday. As I said in the Market Alert before, they will find a way to force Powell's hand. They'll crash the market down heavily so that they get what they want. And you'll see here, mission accomplished. Rate cut odd surge after tariff announcement, just as Trump wanted. This is how they work. They will force the hand of the Federal Reserve to get what they want. As Powell thinks he's in charge, he's got no chance. They want to keep this market up, but first they'll send it to the downside, create panic, get the rate cut, and then away we go. Unlike the pound, of course, which if they wanted to stem the flow of that to the downside, they could increase interest rates, but they can't. They simply cannot increase interest rates because the whole of the economy is on a knife edge. As people have the most debt they've ever had in history, the governments have printed the most debt they've had in history, so they can't actually increase rates. So they're between a rock and a hard place. So let's have a look at yesterday. I'll just drag this down so we can get the chart in there. This is the recorded session just before the start. You can see there the market being brought down to the 200 bar moving average. Volume increases significantly. And as expected, and I spoke about in yesterday's Market Alert, bring the market back to 76%. And this is precisely what we saw yesterday. You can see there prices being moved to the upside. You'll see me here. I can just find the right spot. There you go, looking at where the market should trade to. Drew in a couple of fib retracements as the trade was in progress, and then you'll see eventually the market will stop at the 76% retracements that drew in there. You can see there, and then the market becomes sideways. Notice the volume here. Now the market stops, and then we trade sideways. And then Trump comes out and says he's going to increase the tariffs on the Chinese imports, and bang, straight down to the 200 bar moving average, and it's game over, and the market then moves south. As I've said before, they'll force the hand. The implied volatility has been showing that there was something coming down the line, or the option sellers were concerned there was something coming, and that's precisely what's happened there. So let's have a look at the overnight and see what the market's doing. So here's the completed picture for yesterday. The market reversing, selling here, and there you can see the market trading up to the fib retracements that were drawn in before the announcement. Markets move lower. News today, before we just look at the overnight, important day again today. We've got the non-farm payroll figures out at 1:30. So let's see how the market fares after they come out greater than 164. If they come out less than this, the forecast is 164. Previous was 164 as well, and it came out at 224. The last thing Trump needs is a higher number. He'll be looking for a lower one. They're all rigged, but that's what they'll be looking for if it was realistic and honest figures, but they're not. So overnight the market's found some support and is just trading sideways. So imagine it'll be fairly quiet unless they try and pump the market to the upside in the pre-market session for the news at 1:30 there. And then in the pound, yesterday the market lower again. A couple of sell signals there before the market rebounded on a bit of a dollar weakness as Trump made his statement or his announcement on Twitter, because that's the only thing that moves the markets these days is a tweet from Trump. And at the moment that sideways there. In the daily chart, starting to find a bit of support at the moment, but not a lot there. And meanwhile, Bitcoin as well moving to the upside. Took all day before the market really got going. You can see it later on, and then overnight the market has been sideways. So a bit of momentum coming back into this market as well. If we look at the 4 hour, you can see prices moving up quite strongly there. Watch the 200 bar moving average here. And in the daily chart, prices also coming off the 9080 level that we drew in a couple of days, well, over a week ago for this market there. And there's your 200 bar moving average for the longer term. A few other things before we close. Deutsche Bank closed below the 200 bar MA in the hourly chart. I've been watching this for a few weeks. Weakness coming back here, building up nicely for some carnage. And unfortunately, I'm actually not going to be here until a week today. I already have things planned, i.e. a few days away. Bad timing on my part, but I will be taking the laptop. There just won't be any market alerts, I'm afraid. But I'll still be observing and trading in between if I can get the chance. Yeah, the implied volatility spiking up to 14.99 as well. And when we look at this in the longer term picture, easier to see. You can see there we've gone from amber, we had the warning, and now it's moving to the upside there based on the markets closing below the moving average. And we can see what happens each time the market does this. The only thing is that they may use the unemployment figures to bounce the market, but the goal here is to get Powell even to make an emergency rate cut. If they can sink this market a few thousand points, then that's what they will do. Anything to get Powell to do what he doesn't want to do. And yield curve is back up to date. They've released all the figures, so it's still inverted. Recession 13 months down the line from when it first inverted, which is March of last year, so June of next year, things should be starting to look a bit sticky as far as the economy is concerned as well. So again, keep this in mind. This is why all this is in here for you. Okay, that's it for this one. I will be back a week today, unless I can get something in between, but otherwise that's the case. Keep an eye on things. And as ever, thanks for watching. See you in the next one.